Hello, this is Manesh Patel with IMTF Trade. Today we're going to talk about reverse trading, something a lot of people do not think about, but it's a very valuable thing as a tool set that a trader can have. Now, how does it work? A couple of things, prerequisites. You're only doing pullback trades. And two, you know how to recognize major support resistance levels, which are boundary conditions where things are going to happen. Okay? So here's a live chart in the E-mini S&P 500 futures. I blogged a quick day slash swing trade, a bullish trade yesterday in regards to a trade for the E-mini. And the reason why is the market's been going down. The reward to the downside is getting very limited, and there's a lot more reward to the upside. So what we're looking for were conditions where we could see a possible bullish trade on a 60-minute, which is the bridge between the day traders and the long-term and the swing traders. So you could see here we kind of retested a low right there, and then we came right back to this level here, this green line here that had some crosses, and we broke that resistance level, and then we kind of hovered around it there. So there was some signs here that the bearish movement, the momentum was kind of dwindling down. So we're looking for a quick pullback trade, a low risk scenario, high reward to go bullish, to sit there and capture this thing going up, to maybe retest this high right there, which would give us a 5 to 1 reward risk ratio, or possibly get these multiple time frame resistance levels up here, which would sit there and get us close to about 10 to 1 reward risk level. So what we did was we waited for this here. You'll notice it was hovering around. We got one bar here that closed, and notice this closed a lot higher here. So at that point, we're like, okay, let's take a low risk trade on this and see exactly what happens. So on this same bar right there, this bar right there, we put a pullback order right at the green line, which is the major support here, the boundary condition, okay? And our thought process is that we're going to test this market out. If it's ready to go bullish right now, this is the moment right here, because it was showing signs there. If we get stopped out, then we're going to look for a reverse trade within X couple of bars, okay? And only if it sets up a multiple time frame resistance level too, which will be at this point right there or lower, okay? If it goes lower, it's better. Why? Resistances are going lower, which is exactly what we're looking for. If the resistance was here, then we kind of hesitate a little because it's not confirming that it does want to go lower, and because we are in a consolidation pattern. So to break out of a consolidation pattern, we're looking for resistance to go lower. So here we enter the trade here. There's my reward risk tool. You could see that we got stopped out right there for a loss right there. So we took a loss here, a 6.6 tick loss right there for the E-mini, which is okay because that was part of our trading plan. Now, once we took that loss, what we're doing is we're waiting to see exactly what happens. And as I said to you before, we're looking for a multiple time frame resistance level lower than the current level here. If it's here, you do have a high probability, but it's not as high as a lower resistance level because your resistances are going down. So you could see here, we closed back above here, kind of retested this resistance level there. So if you're a aggressive trader, you could have re-entered right there, the same point that you basically had gone bullish with, and you could have shorted it right there, or you could sit there and wait for a multiple time frame resistance level. And you could see here these dots here develop, which are basically day and swing multiple time frame resistance levels, okay? You know that the higher time frames are thinking bearish because you have these crosses here, which are swing and long-term resistance levels. So here, what happened is you got 1, 2, 3, 3 dots in a row for 3 bars. Basically, the day and swing traders are trying to sit there and take this bearish. These are the machines and the day traders and all that there. So on this 4th bar right there, on this 3rd bar, we noticed that. So we actually put an order on this bar right there, and that would be your reward risk tool here. So we're looking for here to enter here, and our stop would be just a buffer above that green line right there, which would be right there. So you're looking at here around a 4 tick stop right there, okay? Now over here, what we're doing is we're gonna say, okay, at least it's gonna go retest that low right there, which would be our 5 to 1 reward risk ratio, okay? So we're looking at this reverse trade right there to at least come there. If it did that, then we know we're going to get our loss back here, plus we'll be profitable too. So that's a win-win scenario on everything. but it also had a high probability of breaking that. Reason why is we know it does not want to go bullish at all because we lost in that trade. So we know it wants to go bearish, so there's a high probability it's going to break it and keep on going. But so what we want to do is go sit there, and at this point right here, right there, this is going to be our preserve mode, where we could take 50 to 75% of our positions off and tighten up our stop. Our stop is typically these green dots. Once it gets to preserve mode, we're going to use this red line plus a buffer as my trailing stop. And you could see here we entered on this bar right there roughly around 2 o'clock Eastern Standard Time yesterday. Okay, and we got stopped out here at close to about, what was this, about 9 o'clock yesterday. So a couple hours later, we entered a trade here, and you could see we got to preserve mode right about here, which was around about 6 o'clock Eastern Standard Time. And you could see at that point, basically our red line plus a buffer is our trailing stop. And you could see that we're still in this trade. We're not going to sit there and try to take this thing off or guess where it's going to go. Some people choose targets. If you are, I'm going to show you exactly how you could choose that in just a moment. But you could see that this thing's still going, and we're going to use a trailing stop here. So if we get stopped out right now, then we know that basically we'll get stopped out roughly right there. We'll walk away with an 11 to 1, 10 to 1 reward risk ratio, which is really good. Okay, so we got nothing to lose at all. We're going to let this thing keep on trailing going down. Okay, if you sit there and you go to the weekly time frame, that's where our levels are being coming from. The next level, major multiple time frame long-term support, is going to be roughly right here, which is at 2703, which you could see these crosses right there, and you can see that's a major support right there where this could go. So if you do want a target, then you could choose that level to be there, or you could sit there and keep on trailing until you get stopped out for a profit, which is at the bottom. Okay, so if you do get to this level right there and you get out, you're looking at a 1700% return on the reward risk side. Not bad at all for a reverse trade. So you got your loss back, plus you came out to be profitable. That's the beauty of reverse trades. If they occur, then basically that means you got volatility on your side, and it's going to sit there and go in a big trend in a short amount of time because you already got a sign that is not the one to go one way. Hope you enjoyed the tutorial on reverse trades, something you should look at. Remember to look at the criteria I did go through in order to sit there and implement this. Okay? Have a nice day. If you have any questions, you can email us at info@eiicapital.com. Bye-bye.